Welcome to our 10-part video series based on Kelly Smith's book, The Top 10 Profit Killers for Plastic Surgeons and Medical Spas. During this series, Kelly will train on each of the top 10 profit killers that commonly drain the profits out of medical spa businesses. Our goal during the series is to help you walk away with strategies and tactics that will help you attract more clients, sell more products and services, and keep as many of the profits as possible. Let's get started. How to set clear monthly sales goals and avoid profit killer number 1. Are you looking for ways to set clear sales goals with team buy-in? Do you want to figure out ways to reduce expenses and increase your profits? Great. In this video, Kelly explains how to avoid profit killer number 1, not having a clear and measurable financial plan. Here's Kelly with more.
Hopefully you've had a chance to read the Profit Killers book, but if not, I'm going to tell you everything you need to know about how to avoid profit killer number 1 today, which is not having a clear financial plan, a clear and measurable, which is a key word, financial plan for your med spa, plastic surgery office, or aesthetic practice. So we are going to share the main points that you need in case you're uncomfortable with numbers, which after working with over 3,000 clients, I'll tell you that the majority of our clients are uncomfortable with the number side of their business, the analysis, understanding if it's working, if it's not working, where to start. It can be an overwhelming project, and I am going to simplify it for you today so you understand the keys necessary to be successful, and more importantly, to know whether you're successful or not by your numbers, which is really easy to do. So really, before you do anything, you have to do one thing. You have to figure out where you are, one, and where you want to go. We know this even by using our navigation system in our car. If we don't tell our navigation where we're going, it's no shock when we can't get there. It seems really obvious, but this is the problem that I see in practice after practice. So what I mean by that is maybe you're seeing your profit and losses, but a profit and loss is done after the month is completed. It's too late to do anything about the numbers. What I want to share with you today is a proactive way to track your numbers along the way through the month so you can have an impact on improving the numbers before the month is over. And that is critical. I would say the top 2 things that have to happen with every new client that I take on in order to create exponential growth is a clear financial plan and weekly measurements, along with an annual marketing plan, which happens to be preview profit killer number 2 for next week. I'll talk to you about that. Finance, marketing, and operations are the 3 main components of any business. It does not matter what kind of business you run. What I'll say is the finance is often the one that's overlooked. So you create a plan by looking at either how your historical performance has gone, which is looking at your past numbers and projecting your future numbers, or if you're starting from scratch, you can start out with number of appointments you think you'll do in order to forecast your revenue. But the way that we want to do that isn't just income. When I say setting financial goals, what I mean is creating a financial plan that shows month by month what you're going to do by service. So for an example, your services might look like toxins, fillers, laser hair removal, IPL, laser lipo. It depends on what you've got, right? So you just take those through and list what services do we offer. Then we look at what revenue have we been doing in the past on average. Now, I know we're in a difficult time to understand our numbers because we've all gone through the pandemic. We've been open and closed, but you can even look at your 2019 numbers and look at the annual total divided by 12, and then you have an idea of what your monthly averages are by service. If you're not currently tracking your revenue by service, that's something that would be a first place to start. And you do that in your POS system, your point of sale system. So when you ring a client out, hopefully they've made an appointment that's for toxin or for filler or for laser hair removal. When you check them out, your system is tracking by revenue, even though your profit and loss might just have one line that says income. So they're two they work together, but they're 2 different sources for you. So a lot of my clients understand what they're bringing in on a monthly basis, but they don't know where it's coming from. They don't know how much money is coming from injectables versus laser versus surgical, as an example. So when you set up your chart of accounts for accounting in order to get your profit and losses, that's a key area. How do you structure your chart of accounts? And basically, what I want you to do is structure them the exact same way that I'm telling you to structure your projections and your goals. So if we have a goal each month and we know how much we're looking for in injectable revenue, revenue and income mean the same thing, by the way. And so revenue, income is what money comes into your practice each month. Then you have your expenses like your rent and your payroll and your cost of goods and all those expenses. And then when you minus those away from the income that came in, you've got what's called your net profit. And these are key things for you to understand. So I'm all about net profit because that's actually the money that you get to either invest back in your business or as a reward for all the hard work that you've done. So net profit is really a focus that you'll see. We talk about profit, 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 because that's really what is the result of running your company correctly. So as you look at this, we set our goals, and if you're just trying to kind of maintain the status quo, you're looking at growing your revenue about 10% over the previous year. And that's a good way to project what you want your monthly income to be. Now, keep in mind when you do your forecasting or look at your numbers, you'll notice that certain months are lower on average. You know, June, July, August, those can be low months. Some practices do really well in November and December, depending on what they're promoting and how they structure their promotions and things like that. But the summer months can be really difficult. And that's changing because more and more practices are offering things like muscle stimulation or feminine health, things that are fine to do during the summer. They don't have downtime. You can have sun, you can be exposed to sun and still benefit from these treatments. Even microneedling as an example. We've really come a long way to have services that are good year round so that you can have a healthy fiscal practice. So after you take step one and you list what services do I offer, what are my monthly goals, 10% over last year, look at your average cost per service and divide the monthly revenue by that and look at how many appointments that means you need to average. This is a way to check whether your projections are realistic because maybe you only have an injector in twice a week. So you need to know, okay, I've got 16 spots available a week, but I'm forecasting to make $100,000 a month, and that's 50 appointments a week. Right away, you know, oh, something is not adding up here. So what you look at this is top down and bottom up to understand your numbers. So top down is here are my services, here's what my goal is for each one, and here's what my monthly revenue goal is. Looking at capacity is here's what my average appointment cost is, not cost to you, sales price is per appointment, not series. So if you've got a series of 3 feminine procedures, let's say, you look at what is the cost for one, let's say at 750. So your average cost is 750, not the 2,500 that you sell the series for. That's a key thing that I get asked about a lot. And that's how you can look at, okay, is this realistic? Can I do this many appointments? Do I have the staffing available? Do I have the equipment available? And the rooms available. Those are really all you need. And that is your projections. That's all you need in order to create your monthly revenue goals. After you have that, then we look at, okay, let's track our performance each week. Because like I said before, when you get that profit and loss, even if your bookkeeper or your manager is really on top of it and you get it by the 5th of the month, the milk's already spilled. There's nothing we can do about that. Versus if we see how we're tracking each week along to our goal, we could decide to do an outbound call campaign. Maybe we do a flash sale. We can do all kinds of things before the month is over to motivate our sales to increase. Now, one of the tools that I recommend is our Revenue Weekly Tracker, and you can get that in the comments below after our presentation today. And what this does is in 5 minutes a week, you can know, okay, what am I averaging sales-wise? What does that mean that I'm producing on a day by day? And what does that project my month to end up? Am I going to be over goal or under goal? Do I need to make some adjustments or am I right on track? Usually the reason why practices or any business doesn't track revenue and numbers and expenses is because they just feel like they don't have the time. And even though this should be a top priority, operations, staffing, other firefighting duties take over, and we don't get to the very important. I don't know how many of you remember Stephen Covey and the Seven Habits of Highly Effective People. You know, that those books, the Seven Habits books, they begin with the end in mind. And that is what this is. Clearly plan your destination and you're 80% more likely to get there. So if we have a goal and we know what it is and we share it with the team at least a quarter in advance or a month in advance, you can't change the goal of the month once you start having a really good month. So set your goals clearly and measure each week how we're doing. So the way I teach practices to do that is to use our revenue tracker. So let's say every Friday or Saturday when they close, they enter in the current sales of the month and they already have their goal entered and they enter in how many days they have worked so far that month. Everything auto calculates for you. So I recommend that you grab this free tool and start using it. I just want to share a story with you. One of my first clients that I worked with, they had a laser and vein center and they had their best year ever was about 800,000. Two general surgeons were running it and they really wanted to get out of call. They wanted to grow their business and they were spending $20,000 a month on marketing. The two changes that I made with them in order to take them to $4 million and two locations within a few years was A, cutting way back on the marketing budget and doing it correctly, but B, setting clear and measurable financial goals and looking at them every single week. We actually looked at them every day in the beginning to get on track. The power of knowing your numbers has transformed so many practices. I don't know why we're afraid to look at the numbers. I guess if we pretend like we put our face in the sand and don't see it, maybe it'll take care of itself. But the numbers are not going to take care of themselves, and you need not be afraid to take a look at them because that is the first step in improving performance. One of the other benefits that might not come to mind immediately with weekly measurement of goals and having your manager and your staff involved in this is if you do set up a bonus structure, which is included in this revenue calculator for you for anything above goal. So many times when I talk to business owners, they say, yeah, I want to motivate my staff with bonuses, but I can't possibly afford to do that because I'm not making enough money to cover my expenses. How could I give more money if I'm not making enough money? And that's very, very true. So if we set these goals realistically, maybe it's on that growth curve of 10 or 20%. And of course, if you add new equipment, you can raise it again based on your new availability to make more money. Then you're really going to see that your team begins to work together more and you have to manage less. Sort of like getting everyone to row the same direction on your crew. Everything becomes more efficient and successful. So what I've found when I implement the weekly revenue tracker with clear goals in different practices, we find the managers and the staff and the injectors and the laser technologists working together to reach that goal because everybody wins. Everybody gets a bonus if we're above goal. So what I suggest is like a 1% bonus for the team, and that would be about $100 for every $10,000 over. And this auto calculates for you. So if you've been wondering, how do I get my team motivated? How do I get them to work harder without requiring my management and micromanagement on all of these important things? This is your answer. I have seen this take practices up $100,000 to $1 million a year. I've seen them be able to go on trips and rewards, and I've seen them be able to have contests of the week, contests of the month for performance. And it's really changed not only the performance, but the culture of the office. And I know that all of you want to know, how can I motivate my team to work together, require less management, less prodding, less nagging, if you will, to get the job done. And that's what we do here. So once we clearly identify the revenue goals, and we measure the weekly performance, this little magic begins to happen. And what it is they become self-managing. They all do want the goal. And suddenly the esthetician is following up with the nurse injector and saying, hey, have you called all your follow-ups? Have you followed up on every injection? You've got them coaching each other to do what they know they need to do, but you're not having to do that. and your manager will sigh a big sigh of relief as she begins to see this magic working in your practice, which really isn't magic at all. It's good planning and coaching and motivation, because when you know what you're doing and how your performance is going, you know what is necessary in order to meet the goal. If we know we're under goal halfway through the month, great. We'll do an outbound call campaign. Maybe we'll have an injectable special where people can purchase things at a special price and they have to redeem them in the next few months. Maybe we create a retail 1 day only sale where people can call in and purchase products at a one-time 25% discount. There's a lot of different ways that you can capitalize on this, but the first thing is knowing that you need to. And that's what we're missing, because everyone's looking at their numbers once the month is over. We're complaining about them. We don't know how to make them better. And it's very frustrating because you still have to pay payroll and marketing and rent and overhead, but you didn't create enough money that month to do so. I know nobody likes that outcome and that challenge. So after you talk about understanding your revenue, you move into the next part, which is your expense management and your key performance indicators. You know, what should your expenses be running as a percent of income? This is a more advanced area that if you are already doing your revenue and you're setting goals and things like that, then we move up to the next elite level where it's even fewer practices that understand their cost of goods and their expenses. So here are some numbers that you might jot down, or if you have the book, they're in the book as well. But you know, you can look at things like rent should be less than 5%. You can look at your net profit. We want that to be 10 to 20% of income. And I hope you guys understand what I mean percent of income. So let's just say you have $100,000 a month coming in. If you're trying to do 5% of income for rent, your rent should be around $5,000 or less. Okay, so looking at things in a percentage of income is critical, because the key expenses that you want to focus on measuring and altering and improving are those percentages of income that are over 1%. So that's why I'm sharing with you things like rent, net profit. Marketing should be about 5% to maintain your market share. Sometimes marketing can be anywhere from 10 to 20% for the first 6 months to a year of a startup. But once you're going good and you want to maintain your market share, you should be spending about 5% of income to maintain that market share. A lot of practices think that once they get up and running, they can kind of let the marketing go. That is a commonly made mistake. So just know that about 5% of income is required to keep your business healthy, growing, prosperous, and holding your market share. When you want more market share or you're really going into a growth mode, we'll move that up to about 10%, but our goal is to get back down to 5% when we're a healthy practice. Some of the other numbers that are important to know is your payroll is usually 25 to 30%. Owner's draws are usually 5 to 10%. We look at cost of goods depending on how you're classifying them. Cost of goods are usually 25 to 30%. So let me start here and just tell you what is a cost of goods and what is an expense, because that's something that I find a lot of CPAs don't understand with this business. And many times you're using an accountant that's not specialized in the industry. So when you create your chart of accounts for profit and losses, you want your goals by injectables, laser, surgery, etc. And then you want your cost of goods by cost of goods for injectables, cost of goods for retail, cost of goods for surgery, cost of goods for laser. So let's say you have lasers that have a 25% consumable cost. You know, it's that cost per treatment that you use on an applicator tip or on a replaceable item with your laser. Maybe you're lucky enough not to have a lot of consumables with your lasers, and that's great too. Then that's really a cost of goods. So what is required to deliver that service to your clients? For injectables, it's going to be your toxins and your fillers, your alcohol, your numbing, your needles, your storage of those. It's any of those things that are directly responsible for how do I actually perform this service. For lasers, it could be things like your ultrasound gel, your numbing creams, the disposables, consumables. Those are the common ones that you'll see. Retail obviously is your supplies. So once you know that, you're really looking at, okay, here's what it actually costs to deliver these services, and then you know which services are more profitable than other ones, and you can decide how you really want to grow your business, focusing, of course, on growing those most profitable ones over the ones that maybe don't have as good of margins, or knowing how much can I discount? What sort of cross promotions can I do? When you really know your numbers, I'll tell you what, it's the biggest stress reliever that I've seen. Just knowing the numbers, then you can make an impact. You can influence, you can improve those numbers. So don't be afraid to look at your numbers and realize that this does not have to be a 20-hour project. You can create a good revenue plan in an hour. You can look at your expenses quarterly, which I recommend really looking at quarterly expenses, but weekly revenue, because expenses take a little bit longer to adjust to your improvements in your business. So those main areas that I say are super important to track would be your percentage of income of marketing, payroll, cost of goods, your net profit, of course, rent, and owner's draw. Those are really the most important trackable expenses that I want you to focus on. And the ranges that I'm giving you are the industry averages, because maybe you're already doing great and you've got your payroll down to 20-25%. The chances are you can't get it any better than that. So focus on your cost of goods, or focus on your marketing and your return on investment. So profit killer number one is having clear and measurable goals. And my goal today is to simplify this so that you're not intimidated by your numbers and you understand where to start. And in the comments below, click the link and get the weekly revenue tracker and begin using this once a week, and let me know what sort of impact this has on your business. Because I know when we implement this, it is a game changer, and we're giving this to you for free. So please take advantage of getting the revenue tracker, giving it a go, and letting us know how it works, because I'm excited for you to watch your numbers get better and better every single week. Now, I'm going to be on every week for 10 weeks at this time going over our profit killers. And next week, as a preview, it's why you need an annual marketing plan and how you easily create one. So if you're wanting to learn how to create your annual marketing plan, please join me next week, because I'm going to be showing you step by step how to quickly pull together a good marketing plan for 2021, and explaining why it improves your net profit, which is what I've been talking about mostly today. Net profit is where it's at. You want to, of course, have sales growing, but we want to understand our expenses so that at the end of the day, you've got a profitable company that will support you, your family, your staff, and maybe when you get ready to retire, you can sell your practice for a very good return on investment, and your valuation will be impressive, and all of your hard work and years of dedication will pay off for you. So remember, I am hoping to influence your profitability, because I want this year to be the most profitable year yet.
Thanks, Kelly. If you enjoyed this video, be sure to like, subscribe, and click the notification icon to be notified every time we post a new video. And don't forget to grab your free copy of Kelly's book and all of the resources we've provided. You can find all those links in the description below.